for day 128 of the second Trump administration. And what are we talking about tonight?
The US federal court has ruled that President Donald Trump overstepped his authority by imposing global tariffs.
Well, in the last few minutes, the European Union says it's suspending planned tariffs on the US.
We are close aligned with the United States of America, you're right, but we are not dependent on the United States of America.
Xi Jinping has been travelling around the region. Of course, China has a good message for them, saying, stick with us.
He also said that China is ready to work with the European Council.
We are a nation that believes in open trade, and I regret
something is brewing, and it's not just another round of diplomacy or another press conference. It's on a full-scale economic standoff, one that could reshape the global power structure. On May 24 of this year, President Donald Trump sent a thunderous message to Europe. A 50% tariff on European imports will go into effect June 1st. That's not a threat. That's a declaration of economic war. According to reports from the Wall Street Journal and Fox Business, this move comes after months of frustration building inside the White House. Frustration with Europe's trade policies, its soft stand on China, and its growing resistance to aligning with America's economic vision. Now the question echoing through every boardroom, battlefield, and Capitol Hill briefing is this: is Europe quietly pivoting away from the United States and towards a new financial future, one that might leave the US dollar behind? A big thank you to today's show sponsor, US Gold Mining, Inc. Now, let's break this down. For decades, the US-Europe alliance has been rock solid militarily, financially, and diplomatically. But that alliance has always depended on shared values, shared risks, and shared economic policies. Lately, that's been unraveling. The United States is confronting China head-on through tariffs, tech bans, and trade restrictions. Washington sees Beijing not just as a rival, but rather a strategic threat. But what about Europe? Well, Europe is playing it safe, playing it soft, in some cases, playing it both sides. While the United States tech giants are getting blocked from Chinese markets and American farmers face retaliatory tariffs, European companies are cutting deals with Beijing, from German car makers to French luxury brands to Brussels-based investment funds. So the message from Washington is simple. You can't have it both ways. You don't get an open access to American markets and sweetheart deals with China. That's where the 50% tariffs comes in. It's not just about punishing Europe. It's about forcing a choice. President Donald Trump's economic team has made it clear. Europe's policies on taxation, regulation, and trade with both the US and China are out of step with the new reality. You can't call the US your ally in public and outsource your economic future to China behind closed doors. Because, let's be honest, this isn't about a few percentage points on wine or steel. This is about who controls the future. And it's about whether the West stays united or whether it fractures under the weight of politics, profits, and yes, appeasement. But there's something much bigger here, something financial, something global. Washington insiders are asking the one question nobody wanted to hear. Is Europe preparing to move away from the US dollar? Because when you look at the signs, it's hard not to wonder. Europe has been increasing its gold reserves quietly for the past few years. The euro is gaining ground in cross-border transactions, especially in Africa, the Middle East, or West Asia. Brussels has started talking about strategic autonomy in financial systems, including payments infrastructure and currency reserves. And most notably, Europe has not aligned with the US push to exclude China from major international tech and trade systems. That's not just diplomacy. That's a signal. A signal that says, we are hedging our bets. We are not all in on the American future. And if Europe starts reducing its reliance on the US dollar, even slowly, the consequences could be enormous. Now, let's be real. The dollar ain't going anywhere overnight. It is still the world reserves currency, still backed by the most powerful economy and military on the planet. But make no mistake, the cracks are showing. And if the United States doesn't get serious about protecting its financial leadership, those cracks could become fractures. And that's what Trump understands, according to some. He's not just playing politics with tariffs. He's playing a long game, a hardball strategy to force Europe off the fence, because in a multipolar world, strength matters more than style. Decisiveness beats diplomacy. And yes, loyalty must be earned or enforced. So what should we, as Americans, take away from this? First, this isn't just about trade. This is about power. Second, Europe may be our ally, but that doesn't mean they are on our team economically. Not when they are flirting with China, resisting pressure, and considering financial independence from the US-led system. And third, the US has to wake up to the reality that global leadership is not a birthright. It's something you fight for every single day with bold action, strategic partnerships, and yes, economic force when necessary. Here is the bottom line. The 50% tariff threat isn't just about punishing Europe. It's about shaking the table, forcing decisions, and drawing a line in the sand. And it raises a simple question. Will Europe choose America or China? Because sitting in the middle, that era might be over. This is a new world we're in, and it's reward strength, not softness. And for the United States, now more than ever, that strength begins with understanding who stands with us and who just standing nearby. But there is a twist most people haven't thought about. What if Europe wants the US to overreact? Just think about it. A 50% tariff from Washington gives Brussels the perfect excuse to say, and I quote, "We didn't leave the dollar. America pushed us out." End of quote. Behind closed doors, Europe has been itching to break free from America's financial grip. They've experimented with non-dollar payment systems. They've questioned US sanctions. And now, Trump just handed them the narrative they need. We tried diplomacy, but the US turned hostile. In other words, tariffs. It might not just be retaliation. It might be the trigger that helps Europe justify turning east towards China, the yuan, or even a new financial system altogether. So ask yourself, who's really playing who? Because if this is a chess match, it's not clear the US is the one making the next move. And while Washington and Brussels battle over tariffs and currency influence, something else is happening quietly in the background. Investors are already picking sides, but they are not doing it through diplomacy. They are doing it with their money, because in the middle of all this uncertainty, one asset is breaking out with force: is gold. While world leaders argue over trade routes and financial systems, smart capital is rushing towards something far older and far more reliable. Gold has experienced a remarkable surge in 2025, significantly outperforming major equity indexes. The Van Eck Gold Miners ETF, GDX, has soared by 49.1% year to date, while its counterpart, the Van Eck Junior Gold Miner ETF, GDXJ, has achieved an impressive 51.27% increase. The SPDR Gold Shares ETF, GLD, which tracks the price of gold bullion, has risen by about 27.93%. And the iShares Silver Trust, SLV, has gained 13%. In stark contrast, the NASDAQ 100 index has experienced a slight decline of 0.46% year to date. This divergence highlights a significant shift in investor sentiment, with many turning to precious metals as a hedge against economic uncertainty and market volatility. The robust performance of gold and silver assets underscores their enduring appeal as a safe haven investments in turbulent times. This leads me to talk about today's show sponsor, Goldmine Inc., NASDAQ stock ticker USGO. On January 20th of this year, President Donald Trump signed an executive order called Unleashing Alaska's Extraordinary Resource Potential. It reads, and I quote, "The state of Alaska holds an abundant and largely untapped supply of natural resources, including, among others, energy, minerals, timber, and seafood." President Donald Trump indicated he wants to develop Alaska's resources to the fullest extent possible. The executive order directs U.S. policy makers to fully avail itself of Alaska's vast lands and resources for the benefit of the nation. As you can see in the graph, gold stocks have a tremendous gap to close compared with gold's spot price, which has soared. I am bullish on the gold stocks sector right now. Bank of America's chief investment officer is predicting a weaker dollar cycle, as you can see in the chart below. With no debt and approximately $3.9 million in cash and cash equivalents as of December 31st, 2024, and a project in Alaska, the sponsor of today's video is U.S. Gold Mining, trading on a NASDAQ stock exchange with the ticker symbol USGO. The stock is trading as of early May, some 40% below its all-time high. At its April 2023 IPO, gold was worth $1,930 an ounce. Now, gold is trading at an all-time high. Yet, USGO's share price is still around its IPO price, down 40% from its all-time high. Their flagship Whistler gold, copper, silver project includes 3 gold deposits with combined estimated mineral resources of 6.5 million ounces of gold, equivalent in the indicated category, plus an additional 4.2 million gold equivalent ounces in the inferred category. One shareholder owns 80% of the company, so this is a very unique scenario. The most critical developments, and in my personal opinion, and a potential value driver, comes from the Trump administration's attitude towards Alaska. So this is Mike Dunleavy, the governor of Alaska with President Trump, and below with CEO of U.S. Gold Mining Inc. and on their Whistler projects in Alaska. Tim Smith, the CEO, came to the U.S. gold mining from Newmont, a 100-year-old gold producer, one of the largest gold mining companies in the world. He also worked for Caminac, which discovered the coffee deposits in the Yukon and advanced the resource until Gold Corp acquired it for $520 million Canadian dollar. One of the most significant buyouts of the past decade. The CEO of the U.S. Gold Mining Inc. was part of the team that sold the Coffee Gold deposits, which was owned by Caminac. He sold it to Gold Corp for $520 million Canadian dollar in 2016. And while we are talking about different projects where outcomes could be different, this is the reason he was recruited to become CEO of USGO, so that he can utilize his skill set and work towards similar goals for U.S. gold mining. With gold recently at $3,400 an ounce, the best performing major assets class in 2025 so far, and with Trump's massive executive order for the benefit of the state of Alaska, with one major corporate shareholders owning 80% of USGO stock, and with a CEO that is a fit for this role. Do your own homework on USGO, trading on the NASDAQ. Remember, there are always risks in investments, and there are no guarantees of any kind. Thank you.